Wow, you've really given us a lot to unpack this time.
Yeah, it's a real mix.
We've got stock market analysis,
Economic forecasts,
a ton of crypto news.
even some interesting statements from former President Trump.
So buckle up, listeners. This deep dive is all about making sense of it all.
Yeah, and finding those opportunities.
Right. Where others see chaos.
Exactly. And the key takeaway for everyone out there
Is that everything's connected, right?
absolutely.
Understanding how these crypto trends,
Global markets.
even CEO resignations, all fit together.
That's crucial for making smart decisions with your money.
Whether you're a seasoned investor or just starting out.
Right, no matter where you are in your journey.
Okay, so let's jump right in with what's been on everyone's mind. Bitcoin.
Oh, yeah, Bitcoin.
Yeah, wild ride.
Definitely a wild ride.
We saw it plummet below $80,000 and then suddenly
Skyrocket.
past $95,000.
After Trump announced a U.S. strategic cryptocurrency reserve,
It's enough to give anyone whiplash.
it really highlights how sensitive Bitcoin and crypto in general are to events like this.
What's your take on it? Especially with Ethereum seeing similar swings.
I think it really points to Bitcoin's potential as an alternative asset, right?
Okay.
A hedge against traditional markets.
Especially in times of uncertainty.
Exactly. Remember, Ethereum took a hit earlier this year, dropped over 30%.
Yeah.
But it's bounced back strong.
It definitely has. It's been a roller coaster for crypto investors.
For sure.
And speaking of the reserve, there's been a lot of talk about which cryptocurrencies would be in it.
Yeah.
Initially, we saw XRP, Cardano, and Solana.
Alongside the big two, Bitcoin and Ethereum.
Right alongside them, but then things changed.
Yeah, the initial inclusion of those altcoins definitely raised some eyebrows.
Even among crypto enthusiasts.
Even Peter Schiff,
Oh, Peter Schiff.
a well-known Bitcoin skeptic, even he questioned the idea of including assets like Ripple.
In a strategic reserve.
Right.
Ultimately, Trump clarified that Bitcoin and Ethereum would be the core.
Which, let's be honest, isn't that surprising?
Yeah, I mean,
They're the most established.
with a proven track record.
Exactly.
But will this reserve actually get off the ground?
That's the big question.
I mean, congressional approval is a big hurdle.
It is.
And let's face it,
Trump is known for making bold statements.
that don't always pan out.
That's true.
It's true.
It's too early to say how this will play out.
Yeah.
But it's definitely something to watch closely.
For sure, this move, whether it succeeds or fails, could have significant implications for the crypto landscape.
It really could.
Now, while Bitcoin's grabbing the headlines, let's zoom out and look at the bigger picture.
The big picture.
The S&P 500's recent dip has many wondering.
Is this bull market finally over?
Yeah, especially with that 5% pullback we saw.
Right.
The market has bounced back somewhat, but is this just a classic bull trap?
Luring investors in before another drop.
Yeah, even Matt Moneymelly.
Who's usually quite bullish.
Right.
He's hinting at a potential shift from buy the dip to sell the rally.
Exactly. So what are you seeing in terms of market sentiment?
I think Matt's insights are always worth considering.
For sure.
And his recent caution is definitely a sign that things are changing.
Okay.
Now, a bull trap, for those who aren't familiar,
Yeah, break it down.
that's when a temporary upswing makes investors think a downturn is over.
Okay.
So they buy right before the market falls further.
Right.
And with Matt suggesting a possible 10% correction,
Yeah,
it's definitely worth considering.
definitely worth considering.
We also have that NYU research
Oh, right.
from their engineering and investment departments.
Yeah, their findings were a bit sobering, weren't they?
They were. They argued that U.S. markets are overvalued,
Okay.
with a lot of optimism baked in,
Optimism?
maybe even American exceptionalism
Interesting.
baked into those current prices.
Okay.
This isn't to say disaster is imminent,
Right.
but it does raise concerns about future returns.
Yeah.
Even optimistic projections from Vanguard.
And they want the market to do well
Of course they do, but they're suggesting 10-year returns might be much lower than we've seen.
than we've seen recently.
Yeah, somewhere between 2.9% and 4.9% for U.S. equities.
So where does someone even look for value in this environment?
Well, that's where Tim Melvin's contrarian view comes in.
Okay, Tim Melvin.
He's been making a case for Europe and Japan.
He has. He's been talking about that for a while.
He argues that both markets are significantly undervalued.
Interesting.
Japan's becoming increasingly shareholder-friendly,
Okay.
and Europe offers attractive dividend yields.
Now, he's not alone in that thinking, right?
Not at all.
Didn't Warren Buffett recently double down on his investments?
In Japanese trading companies,
Which seems like a pretty strong endorsement.
it does add weight to Tim's perspective.
He's been highlighting Europe's potential for years.
Well, before it became fashionable.
Remember his call to buy European banks back in 2022?
Oh, yeah?
Anyone who listened to him back then is very happy.
Very happy indeed.
Of course, this is a long-term play.
Not about quick gains.
Right, but it's an interesting perspective.
It is.
Now, while we're talking about potentially undervalued markets,
Yeah.
that news about the Kroger CEO stepping down right before their earnings report.
Oh, yeah, that definitely caught my eye.
It caught mine too. What does that tell us about the state of the consumer?
Makes you wonder, especially in the retail sector.
Could there be trouble brewing?
It's definitely a red flag.
It is.
Raises a lot of questions.
Raises a lot of questions.
Stepping down right before an earnings report is rarely a good sign.
Rarely a good sign.
It makes you wonder what they're expecting those numbers to look like
Yeah.
and what it signals about consumer confidence.
Exactly. Is this a Kroger-specific issue?
Or is this a broader trend?
In the retail sector,
Yeah.
a lot to unpack there.
Sure.
And it seems like we're going to need all the tools at our disposal to navigate this uncertain market.
Absolutely.
This is a good segue into our upcoming deep dive on technical indicators.
Yes, that's right.
Wednesday, we'll be revealing the best technical indicators based on extensive historical data
To help you read the market signals.
and make smarter trading decisions.
Exactly.
And here's a little teaser for everyone.
Hit him with it.
We're talking about an indicator you already know,
That's right.
but probably aren't using to its full potential.
You're probably familiar with it.
We'll uncover its hidden power.
And how to apply it effectively.
So let's get back to Tim's contrarian picks.
Okay, back to Tim.
Specifically, those European companies.
Oh, yeah. He gave us some tickers.
He did. He highlighted companies like AP Møller-Maersk,
The shipping giant.
L'Oreal, the cosmetics powerhouse,
And Vinci,
the infrastructure behemoth.
with their toll roads and airports.
They're everywhere.
And for Japan, he highlighted Itochu Corp and Marubeni Corp.
Few trading companies.
That even Warren Buffett is bullish on.
He is.
Both involved in everything.
From textiles
To machinery.
to energy.
To food.
They do it all. It's fascinating that he's finding value in these often overlooked sectors
It is. He's looking beyond the hype.
and focusing on solid fundamentals.
Which, as we've seen, is more important than ever.
Absolutely. And speaking of fundamentals, you mentioned European dividends are a bit different than what we're used to here in the U.S.
They are.
Could you elaborate on that?
Sure. In Europe, dividends tend to be more variable.
Okay.
They fluctuate based on a company's profits.
Rather than that fixed payout we're used to.
Exactly.
Plus, they're often paid out just once a year.
Which takes some getting used to for us U.S. investors.
Who are accustomed to quarterly checks.
Very different.
It is a very different approach.
Definitely something to consider.
If you're thinking about investing in European companies,
Absolutely.
the timing and variability of those dividends.
Can impact your overall returns
So it's essential to factor that in.
when you're making those decisions.
So while everyone else is chasing the latest trends, Tim's over there quietly building a portfolio of undervalued companies.
Like a seasoned treasure hunter.
I love that analogy.
He's got the map.
I really appreciate that long-term perspective.
It's the kind of mindset that can pay off big in the long run.
And that's what it's all about, right? Looking beyond the hype
Understanding the fundamentals.
and having the patience to let your investments grow.
Patience is key.
Speaking of patience, let's talk about a stock that's been testing ours.
Oh, which one?
Joby Aviation. Remember those earnings a few weeks back?
Oh, yeah, Joby. It seems to be stuck below that 53 thriller level.
It does. What are the factors holding it back?
I mean, it seemed like there was some positive news with that contract.
There was.
Classic buy the rumor, sell the news scenario.
Ugh, that's the worst.
Stock popped on the news and then gave it all back after earnings.
And to be honest, it's been in a bit of a funk ever since.
Yeah, the Palisades fire and those broader concerns about wildfires
Hang on, Campia.
definitely haven't helped.
Wildfires are a concern for everyone, but for a company developing electric aircraft, it adds a whole other layer of risk.
It does.
What are your thoughts on the long-term viability of this technology
Especially with climate change.
and more extreme weather events?
It's a valid concern.
It is.
Wildfires, extreme weather events, they could disrupt operations.
And raise questions about safety
Investors need to consider that.
when evaluating companies like Joby.
For sure.
But for now, we're keeping a close eye on that 53 driller level.
We are.
If Joby can break through and hold above it,
It might be a sign that the worst is over.
so we're watching for that breakthrough.
We are.
Okay, let's broaden our perspective a bit.
Okay. Broaden it out.
Let's talk about the overall market sentiment.
All right, market sentiment.
We've got some conflicting signals here.
We do.
Some are calling for a major correction.
Well, others are still riding the bull.
How do you make sense of it all?
It's a classic tug of war
Between
fundamentals and market psychology.
I like that, a tug of war.
On one hand, you've got those stretched valuations, slowing growth.
Geopolitical uncertainty.
We talked about all that.
We did.
But on the other hand,
Yeah,
the market has this amazing ability to defy gravity,
it does.
fueled by easy money and the fear of missing out.
Oh, FOMO, that's a powerful force.
It is.
It's like everyone's waiting for the other shoe to drop.
But they keep dancing while they wait.
That's a great way to put it.
It's a strange time.
It is.
But you mentioned that we're seeing a shift in psychology, right?
Yeah,
Is buy the dip losing its magic?
it does seem that way.
Investors are getting more cautious.
They are.
Even the pros are starting to question the market's ability to keep climbing.
Matt Money Melly talking about selling the rally.
That's a big shift.
It is a big shift.
It suggests that even the bulls are getting a little wary.
So if someone's feeling bearish, what are some smart ways to play this potential downside?
Well, Matt himself has been using inverse ETFs, like SQQQ, to profit from declines.
Okay, inverse ETF.
And of course, there's always put options
Put options.
on individual stocks or indexes.
And for those who are still feeling bullish,
Well, as we discussed, value stocks are starting to outperform growth.
they are.
And within value, Tim Melvin's picks in Europe and Japan are definitely worth a look.
It's all about finding those pockets of opportunity, right?
Exactly.
Those sectors that are less affected by the broader market turmoil.
That's what we're looking for.
And that's where a deep dive like this can really add value,
Absolutely. We're connecting the dots, separating the signal from the noise.
helping you see the market with fresh eyes.
Exactly.
Now, before we move on to other topics, let's touch upon a recent comment from Zelensky.
About the war.
Yeah, about the war with Russia being very, very far away.
Yeah, that caught my attention.
It seems to contradict those hopes for a quick resolution.
It does.
What are your thoughts on how this ongoing conflict could impact the markets?
Especially with energy prices already on edge.
It's a delicate situation.
It is.
Zelensky's comment, regardless of its intention, could fuel uncertainty.
And further escalate tension.
Exactly, and with energy prices already volatile, any disruption in supply chains
Or a further increase in oil prices.
could really amplify those inflation fears,
Absolutely, that's the last thing we need.
with the Fed already walking a tightrope.
Between taming inflation and avoiding a recession.
Exactly. Geopolitical events like this just add another layer of complexity.
They do. The Fed is in a tough spot.
They are.
And these external factors make their job even harder.
Speaking of challenging, that Nokia news.
Nokia.
Yeah, didn't you mention they're involved in that lunar spacecraft?
Oh yeah, the one that's currently en route to the moon.
That's the one.
That's right. Nokia's 4G technology is being used for communication between the lander and instruments on board.
Wow, that's pretty cool.
It is. It's a great example of how even technologies that seem niche.
Can have unexpected applications in cutting-edge fields.
Absolutely.
So maybe there's still hope for Nokia to make a comeback.
Even if it's not in the smartphone market.
Right, perhaps.
But for now, the real action seems to be in the more established tech giants.
Like Apple.
Microsoft.
And of course, we can't forget Tesla,
Oh, Tesla. Always an interesting case.
which has been on quite a roller coaster lately.
It has.
Tesla's always an interesting case, a company that operates on its own terms.
Driven by Elon Musk's vision.
And the market's constant hunger for growth.
They love growth.
But even Tesla isn't immune to the laws of gravity, right?
That's true, with interest rates rising.
And competition heating up in the EV space.
It'll be interesting to see how they navigate this new environment.
It will be, but one thing's for sure.
What's that?
It's never a dull moment in the world of Tesla.
Ever a dull moment.
And that's what keeps us coming back for more, right?
It is.
The thrill of the ride, the constant challenge of staying ahead of the curve,
It's about embracing the uncertainty
the volatility.
and using it to our advantage.
I like that.
So as we wrap up this part of our deep dive, let's leave you with a thought to ponder.
Okay, hit us with it.
We've seen the drama unfold in Bitcoin,
We have.
the potential bull trap in the broader market,
That's right.
and the experts' search for value beyond U.S. borders.
So the question for you is, are you prepared to ride the waves?
Or are you going to get swept away?
Are you holding on to the winners from the past?
Or are you actively seeking out those opportunities of the future?
Are you letting fear dictate your decisions?
Or are you using knowledge and discipline to guide your path?
Because in a market like this, Standing still is not an option.
You're either moving forward or falling behind.
So choose wisely, my friend.
And join us again on Wednesday for our deep dive into those technical indicators.
Those technical indicators that can help you navigate this turbulent market.
That's right.
Until then, stay green.
Stay green.
Okay, I want to circle back to something you mentioned earlier.
Oh, yeah.
About geopolitical events and their impact on the markets.
Okay.
We were talking about war in Ukraine.
Right. And Zelensky's recent comment.
Yeah, but there's another conflict brewing that could have even bigger implications.
Oh, you mean?
The rising tensions between China and Taiwan.
That's right. That's a situation we need to keep a close eye on.
Definitely.
The potential for conflict in that region.
Is a major risk factor for the global economy.
For sure.
And it's not just the direct impact of a potential conflict that's worrisome.
Right.
The ripple effects could be massive.
Absolutely.
We're talking supply chain disruptions,
Trade wars.
a whole lot of uncertainty.
Injected into an already volatile market.
Exactly.
And remember, Taiwan is a major player in the semiconductor industry.
They are.
Any disruption to their production could have cascading effects.
Across multiple sectors.
From electronics to automobiles.
It's a stark reminder of how interconnected the world is. And how events on the other side of the globe can impact our investments here at home.
Absolutely.
It makes you rethink what safe haven even means these days.
It does.
Gold used to be the go-to, but it hasn't really performed as expected lately.
That's true. Gold has been a bit of an enigma.
It has.
You'd think, with all this uncertainty and inflation.
It would be soaring.
But it's been relatively subdued.
Subdued.
There are a few theories floating around as to why.
Oh, like what?
Some analysts point to the strength of the U.S. dollar.
Which tends to move inversely to gold.
Right.
Interesting.
Others suggest that cryptocurrencies,
like Bitcoin,
are starting to steal some of gold's thunder.
As an alternative asset.
Exactly.
It's fascinating to see how these different asset classes are vying for attention in times of turmoil.
It is.
It's almost like investors are trying to figure out what the new playbook is.
For navigating this new world order.
Exactly. The old rules don't seem to apply anymore.
And we're all trying to figure out what the new rules are.
But that's what makes this such an exciting time to be an investor, right?
It does.
It's a period of tremendous change and opportunity.
Opportunity amidst the chaos.
I like that.
Me too.
Okay, I want to shift gears a bit.
All right, what do you have in mind?
And talk about a sector that's been getting a lot of attention lately.
What's that?
Artificial intelligence.
AI, everyone's talking about it.
We've seen massive advancements in AI technology.
It's moving so fast.
And it seems like every company is trying to incorporate it.
Into their products and services.
Exactly.
AI is undoubtedly one of the most transformative technologies of our time.
I think you're right.
And its impact on the market is just beginning to be felt.
Yeah, we're seeing it everywhere.
We are, from healthcare and finance to manufacturing and entertainment.
It's hard to keep up with all the developments.
It really is.
But for investors,
the big question is,
how do we capitalize on this AI boom?
Right. How do we get in on the action?
What are the best ways to get exposure to this rapidly growing sector?
There are a few approaches you can take.
Okay, like what?
You can invest directly in companies developing AI technologies. Like NVIDIA, who make the chips that power these systems.
Yes, NVIDIA.
Ogle, a leader in AI research and development.
So those are the companies building the tools.
That's one way to play it.
Okay.
You can also look for companies incorporating AI into their existing businesses, like Amazon.
Okay.
They use AI to enhance their e-commerce platform and logistics operations.
That makes sense.
It's all about finding those companies that are using AI effectively.
Right, but AI is also a bit of a double-edged sword, isn't it?
It is.
There are concerns about job displacement.
Ethical implications.
The potential for AI to be used for malicious purposes.
It's a powerful technology.
It is.
And with great power comes great responsibility.
How do we address these concerns while still fostering innovation and growth?
That's the challenge. We need to be mindful of the potential downsides of AI.
Right.
And work to mitigate those risks.
So how do we do that?
It involves having open and honest conversations.
Yeah.
Ethics, regulation, the societal impact of this technology.
It's a balancing act.
It is.
We want to embrace the transformative potential of AI.
While ensuring it's used responsibly.
And ethically.
Exactly.
Okay, before we move on, I want to get back to Tim Melvin's contrarian picks.
Back to Tim.
Yeah, specifically those Japanese companies.
Okay, Japanese companies.
We already discussed Itochu Corp and Marubeni Corp.
We did.
But are there any other Japanese stocks he's highlighted?
Yes, he also mentioned Mitsubishi Corporation.
Okay.
And Sumitomo Corporation.
Mitsubishi and Sumitomo. Got it.
These are also large, diversified trading companies.
Like Itochu and Marubeni.
Exactly. involved in a wide range of businesses.
It's interesting that he's focusing on trading companies.
It is.
What's the rationale behind that?
Well, they have a unique advantage.
What's that?
They have a broad reach across multiple sectors.
Oh, I see.
They're not tied to the fortunes of any particular industry.
Which can be a good thing in a volatile market.
Exactly. They can weather the storms a bit better.
Interesting.
They also tend to be very shareholder-friendly.
Okay.
With a focus on dividends and buybacks.
So they offer diversification and a shareholder-friendly approach.
Yeah, it's a good combination.
Makes sense in the current environment.
It does.
Speaking of shareholder-friendly, you mentioned that European dividends are structured a bit differently.
Right, they are.
Can you elaborate on that?
Certainly, in Europe, dividends are often variable.
Okay.
And tied to a company's profits.
Whereas in the U.S., we're more accustomed to fixed quarterly payouts.
Exactly.
So that means European dividends can fluctuate more from year to year.
They can, which can be a surprise for U.S. investors.
Who are used to that steady stream of income.
It's a different approach.
It is.
Definitely something to be aware of if you're considering European companies.
So it's important to be aware of that difference and adjust your expectations accordingly.
I think that's wise.
Now, while we're on the topic of dividends, are there any specific European companies Tim Melvin has highlighted for their attractive yields?
He mentioned a few.
Yeah.
In addition to those we discussed earlier.
A.P. Miller, Maersk, L'Oreal, and Vinci.
That's right. He's also bullish on companies like Allianz.
Allianz.
The German insurance giant.
Okay.
And Total Energy.
Total Energy's got it.
The French energy company.
Allianz and Total Energies. I'm making a note of those.
They both have a history of paying solid dividends.
Okay.
And are well-positioned to benefit from long-term trends.
In their respective sectors.
Exactly.
Now let's talk about a company that's been generating a lot of buzz lately.
Oh, which one?
SpaceX.
SpaceX, yeah.
They've been making incredible progress with their Starship program.
Which aims to eventually send humans to Mars.
A truly ambitious project.
It is.
But from an investor's perspective...
How do we evaluate a company like SpaceX?
Yeah, which is still privately held.
That's a good question. Evaluating a private company like SpaceX is definitely more challenging.
Than analyzing public companies.
For sure. We don't have the same level of financial transparency.
And the stock isn't readily available to purchase.
That's right, but we can look at other factors.
Like what?
Their technological advancements.
Okay.
The size and scope of their contracts.
The overall growth of the space industry.
All those things can give us a sense of their potential value.
So it's more about assessing their long-term potential.
And their ability to disrupt existing industries.
It's a high-risk, high-reward type of investment.
Exactly. Investing in SpaceX is not for the faint of heart.
It's not.
But for those who believe in their vision.
And are willing to take on that risk.
The potential rewards could be astronomical.
Pun intended.
Of course.
Okay, let's talk about another company that's been making headlines, though, for less positive reasons.
Oh, which one is that?
Meta. Formerly Facebook.
Their stock has taken a beating lately.
It has.
They're facing a lot of challenges.
They are.
Declining user engagement.
Increased competition.
It's a tough environment.
Meta is definitely at a crossroads.
They are.
Their core social media business is facing some headwinds.
And their big bet on the metaverse.
Hasn't exactly taken off as they'd hoped. It hasn't, and their recent earnings report
wasn't exactly encouraging.
What's your outlook for Meta?
Can they turn things around?
Or are their best days behind them?
It's a tough call. They have a lot of work to do to regain investor confidence.
They do.
And prove they can adapt to the changing landscape.
Of the tech industry.
It's a fast-moving industry.
It is.
But they have a massive user base.
They do.
A strong brand.
And a talented team.
So it's too early to write them off entirely.
But they definitely have their work cut out for them.
For sure.
Okay, before we wrap up this part of our deep dive,
right,
I want to get your take on something that's been on my mind.
True.
We've talked about a lot of specific companies and investment strategies.
We have.
But I'm curious, what are some of the broader themes that you see shaping the market in the coming years?
That's a great question. I think there are a few key themes that will be particularly important.
Okay, I'm listening.
First, the rise of Asia.
Asia, okay.
Particularly China and India as economic powerhouses.
That'll continue to reshape the global landscape.
It will.
That's a big one.
It is.
Yeah.
Second, the increasing pace of technological innovation.
Driven by
AI, blockchain, and other emerging technologies.
That's going to create both opportunities and challenges for investors.
It will. It's a double-edged sword.
What's the theme?
The growing awareness of climate change.
Okay, climate change.
And the need for sustainable investing.
That's going to increasingly influence capital allocation decisions.
It will. Investors are becoming more conscious of these factors.
Those are some major forces to consider.
They are.
It's almost overwhelming to think about all the changes happening simultaneously.
It can be, but remember, change also brings opportunity.
Opportunity, right?
By understanding these broader themes.
And how they're likely to play out.
We can position ourselves to benefit from the shifts that are already underway.
That's a great point. It's not about predicting the future perfectly.
It's about having a framework.
For understanding the forces at play.
And making informed decisions.
Exactly, and that's what we're trying to do here on the deep dive, right?
That's right. We're providing you with the knowledge and insights you need to navigate this complex market.
Well said. Okay, I think that's a good place to pause for now.
Sounds good.
We covered a lot of ground.
We have, from geopolitical risks to the rise of AI.
To Tim Melvin's contrarian picks.
And everything in between.
But there's still more to explore.
Oh, yeah.
Including that deep dive on technical indicators.
The moment you've all been waiting for.
We promised you. And we'll deliver.
We will.
We'll be back on Wednesday to delve into those powerful tools.
That can help you make sense of market signals.
And sharpen your trading strategies.
That's right.
Until then, stay curious, stay informed, and as always,
stay green.
All right, let's jump back into it.
Back into the deep dive.
Before we get to those technical indicators,
okay,
there's one more topic I wanted to touch on.
What's that?
We've been talking a lot about the macro picture.
Global trends.
Even a potential moon landing powered by Nokia. But let's bring it back down to Earth for a minute.
Back to reality.
And talk about something that impacts everyone.
What's that?
Inflation.
Oh, inflation. Yeah, it's the word on everyone's mind these days.
It is, and for good reason.
We're seeing prices rise across the board.
From groceries and gas
to housing and healthcare.
It's putting a real strain on household budgets.
It's a real concern.
Absolutely, and it's not just the everyday expenses that are being impacted.
Right.
Inflation is eroding the value of our savings.
Making it harder to plan for the future.
It feels like we're on a treadmill, running just to stay in place.
I know what you mean.
It's a very real concern.
And it's forcing people to rethink their financial strategies.
It is. We're seeing a renewed interest in alternative investments.
Like what?
Real estate, precious metals.
Even cryptocurrencies.
As people seek ways to protect their purchasing power.
They're looking for a hedge.
Speaking of crypto,
yeah,
it's interesting to see how Bitcoin and other cryptocurrencies are being positioned as potential hedges against inflation.
Right. The argument is that because Bitcoin has a limited supply,
it's immune to the kind of inflationary pressures we're seeing with fiat currencies.
It's a compelling argument.
It is.
And it's gained traction in recent years.
It has.
But it's important to remember that crypto is still a relatively new and volatile asset class.
Right.
Its long-term viability as an inflation hedge remains to be seen.
So it's not a guaranteed safe haven.
Not at all.
But it's definitely a conversation worth having.
Especially as we navigate this uncharted territory.
Of rising inflation.
Exactly.
Okay, shifting gears a bit.
Right.
Let's talk about another challenge facing investors.
Okay.
Rising interest rates.
Oh, yeah. Interest rates?
The Fed has already started raising rates.
And it seems like more hikes are on the horizon.
They do. So how should we be adjusting our portfolios in light of this changing landscape?
Oh, rising interest rates can have a big impact on different asset classes.
Okay, like what?
For example, growth stocks.
Growth stocks.
Which are typically valued based on future earnings potential.
Okay.
They tend to be more sensitive to interest rate increases.
Why is that?
Because as rates go up,
the present value of those future earnings decreases.
Which can lead to lower valuations.
So growth stocks might not be the best bet in a rising rate environment?
They might struggle a bit.
What about other asset classes?
Are there any that tend to perform well?
When rates are increasing?
Well, historically, value stocks have held up better.
Value stocks, okay.
Companies that are considered undervalued.
Relative to their earnings or assets.
Exactly. Their valuations are less reliant on future growth expectations.
That makes sense. So maybe it's time to give value stocks a closer look.
It might be.
And what about bonds?
Oh, bonds.
They're usually considered a more conservative investment.
Right. But how do they fare when interest rates are rising?
That's a good question.
Bonds can be tricky in a rising rate environment.
How so?
When rates go up, the value of existing bonds tends to go down.
Why is that?
Because investors can now buy new bonds with higher yields.
Making older bonds with lower yields less attractive.
Exactly.
So it's a bit of a catch-22.
It is.
You want to hold bonds for stability.
But their value can be eroded by rising rates.
It seems like there are challenges no matter where you turn.
There are always challenges in the market.
It's enough to make you want to bury your money in the backyard and forget about it.
I understand the feeling.
But remember, even in challenging times,
there are always opportunities.
There are. The key is to stay informed, be adaptable,
and make strategic decisions based on your individual goals.
And risk tolerance.
Exactly.
Speaking of strategic decisions, let's finally get to those technical indicators we've been teasing.
All right, the moment you've been waiting for.
I know our listeners are on the edge of their seats.
The indicator we're going to highlight today is the moving average convergence, divergence.
Or MACD, it's short.
That's right. You're probably thinking, wait, I already know about MACD.
I was going to say that.
And you might, but we're going to go deeper.
Okay, I am intrigued. Give us the MACD deep dive.
The MACD is a momentum indicator.
Okay.
It measures the relationship between two moving averages of a security's price.
Two moving averages.
It's calculated by subtracting the 26-period exponential moving average.
26-period EMA?
From the 12-period EMA.
Okay, so I've got two EMAs.
Now, here's where it gets interesting.
I'm listening.
The MACD also includes a signal line.
A signal line.
Which is a 9-period EMA of the MACD itself.
So we've got two moving averages and a signal line.
That's right.
What does it all mean?
How do we actually use this to make trading decisions?
That's the million-dollar question.
The key is to watch for crossovers.
Crossovers.
Between the MACD line and the signal line.
Got it.
When the MACD line crosses above the signal line.
That's generally considered a bullish signal.
It suggests that upward momentum is increasing.
Okay. Upward momentum.
Conversely,
when the MACD crosses below the signal line,
it's seen as a bearish signal.
Downward momentum is picking up. So we're looking for those crossovers as potential buy or sell signals.
That's one way to use it.
But what about those times when the MACD is moving in the same direction as the price?
Does that tell us anything?
It certainly does.
It confirms the trend.
So if the price is rising and the MACD is also rising,
it reinforces that bullish trend.
And vice versa for a downtrend.
Exactly.
This is starting to make sense.
Good.
But let's be honest, no indicator is perfect.
That's true.
What are some of the limitations of MACD?
What should we be aware of when using it?
The MACD, like all technical indicators, is not a magic bullet.
It's just a tool.
To help us identify potential opportunities.
You have to use it in conjunction with other forms of analysis.
Like what?
Fundamental analysis, price action analysis.
So it's not about relying solely on MACD.
It's about incorporating it into a broader trading strategy.
And I'm guessing, like any indicator, it works better in certain market conditions than others.
You're right. The MACD tends to be more effective in trending markets.
Trending markets.
Where prices are moving consistently in one direction.
Okay.
It can be less reliable in choppier sideways markets.
Where price movements are more erratic.
Exactly.
Got it. So it's not a one-size-fits-all tool.
It's about understanding its strengths and weaknesses.
And using it appropriately.
Precisely.
All right. That makes sense.
And remember, practice makes perfect.
Practice makes perfect.
The more you use the MACD and other technical indicators,
the better you'll become at interpreting those signals.
And making informed trading decisions.
Excellent advice.
I try.
Well, this has been an incredible deep dive, to say the least.
It has been a lot of information.
We've explored everything from Bitcoin's wild ride
to the potential of undervalued markets in Europe and Japan.
The impact of inflation and rising interest rates.
Even a deep dive into the MACD.
I feel like I've learned a ton, and I'm sure our listeners have too.
I hope so. It's been a pleasure sharing these insights with you.
It really has.
And remember, the journey of investing is ongoing.
It is.
There's always something new to learn. Something new to explore.
So to our listeners out there,
stay curious.
Stay informed.
And most importantly,
stay green.
We'll be back next week with another deep dive into the world of investing.
Until then, happy trading.